Okay, welcome back. This is part two of today's review. This is the daily intraday review for today, February 14th, 2018. Happy St. Valentine to you and your loved ones. This video is part of the FibStalker analysis and trading service. All right, and as usual, please read and accept the disclaimer here. If you've not done that yet, please pause this video, read carefully and accept it. Trading Forex carries a high level of risk and might not be suitable for all investors. Okay, so let's continue, and I'm going to start from the Australian dollar, Canadian dollar. As you can see, this market, when you look at the weekly time frame here, it is very clear that this market is currently trapped between two levels, and those levels are the 99.63 level and the 97.93. Okay, so the market responded to these shorts, and now it's actually trading longs on Australian dollar strength, and this market could actually could actually continue higher here and retest the 99.63. Okay, so the first target, if this market goes above 1.0053 here, it's 101.10. Okay, that's where this market could go. For now, we look for a retest of 99.63. All right, so this is what we see in this market, and on the daily, there was this, we are gonna see this move lower for many, in all the markets basically. Canadian dollar, Japanese yen continues and continues to move lower here, and we know that this market has targets below, and the target for this market is in the 81.86 area. Okay, so this market on the daily is and has been trading the extension short that you see here, the 89.30 here, and you went to do that first target and second target, and as we mentioned in the past days, this market will and might continue to trade in extension. That's what's happening here. Went into that first target, and there is a second target below the 84.14. So you can see very technical market, a structure and a market trading in extension, very extended. Printed yesterday, printed lower lows here, and we know where he's headed. He's headed into the 81.86. That's again another demonstration of how knowing price structure, how knowing that the weekly will only attempt to buy this market in this area gives us the possibility and the confidence to trade this market on the downside. Okay, so that's what we see here. The euro, Australian dollar, with the renewed strength of the euro here, we saw this market moving above previous size, and it went right into that first target of the extension that we mentioned since last week. This level, I'll remind you again, as we mentioned also on Monday, this level is the 156.25 that was tested last week, and then again came into play yesterday, Tuesday, and brought price right into that first target that you can see here above, right into that target, first target, right into it to the pip, is now coming back. So if it's gonna come back, the other level we're going to consider is the extension, the following extension long. Okay, so if this market comes back now I might trade 56.55. All right, so that's what he could trade here. But as we mentioned, the first target has been hit. The second target is much higher here. You're gonna see and follow how this market is gonna get to that level. The pound, euro pound here continues to be a mess, trading laterally below resistance here. There's a first target at 86.16. This market is also responding to the 88.08. Complete mess. Not even gonna look at it. Opportunities will come, but not yet. So we need to actually wait for this market here. Next is the Euro Canadian dollar. This market, on the other hand, has continued is continuing higher, and as we know, we have a level here, and this level came into play. What we're seeing here is the daily. But actually, this is this is a weekly level we're using here, and as you can see, the market went right into that first target, and now there are targets above the 156 that we have been mentioning in the last few weeks was now hit, and note that this is the first target of the traces in the larger time frame. Okay, so we could see some profit taking coming in from these levels here, if of course there's now the next measure move, and before that can trade, of course the current trend has to fail here, and this market seems very extended, so the probability that it's going to trade the next 50% here seems limited at this stage. Of course, that can always happen. So reality is this market is likely going to continue higher into these second targets. We just need to understand how we are going to capture that move. Okay, so the first target also of the inner move here has traded. So is about it's still the market is still moving higher, and will trade at 156.50. So that's what we are seeing, where we are seeing this market moving to. Okay, the Euro Japanese yen. This market, on the other hand, has continued lower on Japanese yen weakness. We were considering two levels here, and actually the second level seems to be in play here. Let's actually trace this correctly here, and we're gonna see the levels that we see. So the when we remove these levels here, and we see that the level that might be in play, and seems to be certainly in play here, is the high to lows, and that level, it was actually a front run here. But nevertheless, this market has continued lower. This market may not be as technical, and it's not as technical as other markets here. So finally, this market is actually moving. This market has been crawling higher for some time, and then this extension has failed here. And with this extension failed, obviously, that means that all this move higher has failed, right? So one way we can look at it is to use the gap here as one of the levels, 128.18, where this market could move to. Okay, so at the moment this market has not clearly showed what's the level it is trading here. The Japanese yen is definitely strong. The euro is trying to recover now, but this market is likely to continue lower. So we need to understand how we capture the next extension short. So next market is the euro, New Zealand dollar here, and let's look at this market here. So the euro New Zealand dollar, you remember that this market has traded 50% and retested that again yesterday. As you can see, this level is solid, is holding. It has held at the beginning, then there was this dirty move into that area, but now it's actually holding. So that's a solid seems to be a solid level here. It has targets below 162.89, and this market has tried to test previous highs, and remember that we mentioned that the this market has traded 50% here and then into the first and second target, but the next measure move has failed. Highs to new highs failed, and that's the reason why the 50% here is trading and now has the potential to move price into 162.89. Okay, so the question is, how do we get there? There is also a 50% here that has not been yet tested. Maybe today is the first time. 168.11, the low was 168.24, so this level has not been tested yet, although we are seeing a reaction here on the strength of the euro. This market has not tested, and this at the moment is moving laterally between 169, 160, 170 and 168.11. Okay, but the larger time frame, the weekly time frame, is showing the possibility for a continuation lower. We need to test the 68.11, and below that this market will be free to keep moving lower. Pound versus Australian dollar has seen that move higher. Has also seen the break of the sequence here, and the next measure move highs to highs went to the first target. The next measure move failed. Now this level is trading again for some reason, and the next measure move here has failed. So typically we would see this market trading to to the 50%, but this market has not made it yet. In order to move there, this market has to trade a short, and that moves price into that level. And as you can see here, that short has come into play. We don't know whether that's going to hold or not, but that 50% short, almost to the pip there, 167.77.86. The high was 177.79, so it's 7 pips. But this market is not as technical as other markets, so I'll consider that traded. We're gonna see whether this market holds, continues higher, retest that 167.04, or even better, would be even a stronger signal if we would go and test the lows to highs. Okay, that would be great opportunity for longs, because this market has a long below. The structure is pushing this price higher, and there is the possibility to go to 175.50. Okay, so if that happens, that's where we want to get involved in this market. Pound versus New Zealand dollar. This market has initially respected the 190.35. Now it has pierced that level. We're not seeing the same strength in this market as we see in the pound versus Australian dollar, and at this point this indication suggests that this market could retest the 187.14. Okay, so a short setup will bring that price into the 187.14. Unfortunately, we see this move here, kind of lateral move that gives us no edge or very little edge, and until we get out of this range here, this market cannot move lower. Right, so at the moment there is an extension short to short, short to short here that has traded, and then the next measure move on the 4-hour time frame, if it's tested, is going to be 191.01. Okay, so that's the level that we have to look at. Pound versus Canadian dollar has traded that 173.18, has been moving laterally now for over 2 weeks on top of that level, and this is a consolidation on top of a long setup. Long setup is the 173.18. Consolidation, you can clearly see here, bulls and bears failing one after the other, and so however, this market has a bullish bias here because of that extension that has traded and is holding. So the first target is previous highs 177.81. Right, pound versus Japanese yen. Everything that is trading against the Japanese yen is suffering at the moment, is moving lower. So the Japanese yen very strong. You remember that this market has moved into that first target. The next measure move puts this market into this 50% retrace here, the 147, and so that's the next level that needs to be tested in order for us to understand what could happen next. This market, as we see here, this market has traded the first target, then has not respected the next measure move here, and it continues trading lower. So now it has actually hit the first target of that original measure move. So we're going to use the extension lows to lows here to model the 149.60, which is going to be likely the next area of resistance. Let's see if that has traded already. That would be the low from the previous measure move here to whatever new lows have traded so far. That would be the lows to lows. So as you can see, this has traded to the pip here, and so we're going to see whether this is sufficient to keep pushing this price lower into that 146 level. New Zealand dollar, Canadian dollar. I mentioned that we could see this market moving higher, and this market went to retest that 50% long, and actually that happened last week and kept pushing higher. The market is now testing the 92 level. This might or might not hold. Reason is this is a range, and in a range the 50% do not hold. So we need to be very careful. I don't believe that this market is going to hold. This level is going to hold here, and this market is going to continue higher. All right, next Australian dollar, Swiss franc. We are seeing a little bit of lateral move here in this market. You will remember that this market has attempted to push above previous highs, was not successful, and is now moving into 71.84. Okay, so we had an extension here on the weekly that was never tested, 74.47. The on the daily, the extension short has traded yesterday and offered a risk-free trade, and now it's retracing towards that level, and we will see here whether that level is going to be retested successfully, and this will hold this price and keep pushing this price lower. If not, the 74.47 will come into play. Australian dollar, Japanese yen, same similar situation here. The Japanese yen, of course, weak, and the extension did not come into play, and so for now I remove it. This market can test the 82.07, and like the previous market has traded an extension. Now that extension was actually traced when the market was actually moving, but this market has traded the larger weekly extension short here from lows to lows. That's what is in play here. When you do that first target, next measure move is going to be same low to whatever new low here is printed. Of course, we can see that also as a sequence and an inner sequence here, but both trades are both traces are valid, and as you can see, this would put this market puts this market right into that first target. There is also the next measure move on the short term, so we have two levels to look at. One would be the next measure move, the 50 next measure move, and the other would be a retest of the larger time frame. Okay, so basically these are the two areas to watch: 85.30 area and 84.46. all right. Australian dollar, New Zealand dollar, this market is correcting lower as we would have anticipated. This move higher has failed, market in a range, market moving lower, and 107.36 has been hit. That's the first target of this measure move lower. This market can continue lower, or it can come and trade the next 50%. If that happens, that's going to be a gift from this market and a great opportunity to trade shorts here. Okay, if that happens, that's a good opportunity to trade the shorts. If that does not happen, then this market is going to continue lower, and the first target has been hit. The second target I'm showing here on the daily, it's below the 105.58, and there's also an extension short that is in play. Okay, and the actual trace is very similar to the one that I gave you on Monday, but the actual trace is this one. And as you can see, the second target of this measure move, the first target being 106.80. So there's an inner measure move that is pushing price into 106.80, and there is a second target at 105.75 that basically helps price into the second target of the larger time frame. Okay, can you see all these levels that work together? Because algorithms in different time frames, they actually work together to actually push price in the targets that also the higher time frames have. Okay, so whenever there is a target, algorithms will do whatever it takes to try to bring price to that target. Of course, there may be news, there may be different developments, but that's typically what's going to happen. Canadian versus Swiss franc. We saw strength in Swiss franc, and this market came to test the 50% long, opposing 50% long here after trading basically a 50% short here. The market was not able to move higher in the last few weeks. It has moved lower and tested that 73.79. Okay, so in here now, what we can anticipate is either a continuation or a bounce, and in the worst case scenario, the bounce will bring price into the 50% short, and that would be again a gift this time from this market. There are also extension short, because when we look at the weekly and also the daily, we see that this market is very, very extended. If you compare the pace of previous move with the pace of a current move, we can see that it's much higher. So I still will keep and have this the trace here, the 75.64. Right, and that's because this is an extension. If this market comes into this level, this is a solid level to trade for a continuation lower. Euro, Swiss franc, strong, but euro here trading the extension along that I've suggested here, and that has held, and this could actually bring price much higher here into previous 50%, and at that point we will see what happens, maybe even higher. Okay, so the Swiss franc is strong, but the euro, it's kind of recovering here and has traded an extension long. Pound versus Swiss franc, similar situation here. This market has corrected here, printed higher highs, has not tested the full 50%. It's recovering somehow, and we will see whether the extension short here 130.67 will be able to actually reverse this market and let it trade that 128.57. Okay, so at the moment we are seeing a recovery, which is a recovery mainly of the majors against the dollar. The dollar is correcting, continuing that correction lower, and that's why we're seeing this rally and the possibility of 130.67 to trade. New Zealand dollar, Swiss franc, New Zealand dollar strong, and actually when we look at this chart here, we see again a range, and price has reached the bottom of the range, so this could be really it for this market. And the as we can see here, yesterday the extension the daily extension short has traded, sorry, not yesterday, the last week of course, and the weekly has already failed this level. Okay, so this break that we see here, it's a weekly break, and it's important because now at this point bears might not show up again at 68.50, so we don't know that, we need to test that, but it's very likely now that that's not going to happen, which means that this market has the potential to move higher, back higher into the 69.95. And finally the Japanese yen here, the move lower we saw in the last 2 weeks was strong enough to break the 50% long, so the possibility for this market to test 76.36, it's already it's still there. This break shows that the bulls have no intention of actually helping that price higher, at least not at this stage, and so what we see here, we have seen this market not respecting initially the 60.36 area. In fact, the 80.64 area was pierced, and then this market actually moved lower, trading to that first target and also the second target. So the next extension for a continuation lower on a daily time frame be this one, and this extension has failed. Now doesn't mean that the market cannot continue lower. However, this opens up the possibility also for a full retrace of the 50% into 79.61. Okay, so now this is possible. It's gonna happen, we don't know. It's another level I want you to watch, and that's the lows to lows here. That's another level, 79.11, that could stop price and reverse it, and then we could see the continuation lower and the lower level trade there. Okay, and that would be the lows to lows. If these trades, it would be corresponding to the higher level here, 99, 79.60. Sorry. So and then the market could actually move lower. Okay, so this is it for part 2 and for today. So we're in a transitional moves here, and the market kind of showed their hands, and we're seeing that on all the majors as well, breaking their 50% short or confirming their support. That's happening for all the markets. The markets that trade along with the dollar, of course, are under pressure at the moment. That includes Swiss franc, US dollar, Japanese yen, that might offer very good opportunities after breaking that 61% level. New Zealand dollar very strong, and finally Singapore dollar here testing now the 50%, and we will see what happens. So be patient, be careful, and happy trading. See you in the room. Bye bye now.